we're going to be talking today about the new VAT Reverse Charge legislation, which is coming into play on the 1st of March. This is the third time of asking for this, having had 2 delays. For those of you who are old enough, you might remember that CIS has been around for many years. Originally, it was designed to make sure that those labour-only contractors from abroad, I hasten to say perhaps in years gone by, from Ireland, would come over, work the summer, earn their money, disappear off and never pay tax here. So it was brought in to stop that, and that's been very successful. And now HMRC have decided to use it to make us more police for the VAT system. Giving the seminar today, we've got myself, Simon, Charlotte Dandy and Helen Jones, the other 2 partners here. And for the question and answer session, and he's good at tricky questions, we've got Ben Simons, who's one of our senior staff here. On the first webinar, 2 of our clients came up with some cracking tricky ones to get him going, so have a little think. We've disabled the chat function within Zoom, but there is the Q&A session running, so if you wiggle your mouse you should see Q&A. You can click on there and raise a question, or wait till the end when we'll have a question and answer session at the end. We've prepared some notes or a booklet, an online booklet, setting out all of how you deal with the CIS reverse charge. And at the end of today, we will email that to you. And we will also email you the recording for today. So if you can't sleep and you want to, get yourself off to sleep, then clearly listening to Charlotte, Helen and myself will undoubtedly send you to sleep. So if you are nervous about asking questions then and don't want to be recorded, then leave that till afterwards. We're more than happy, the 3 of us or 4 of us, to take questions by email or by phone later. But without any further ado, I will pass you over to Helen, who's going to kick us off.
Thanks, Simon. So the VAT reverse charge for the construction sector comes into force on the 1st of March 21. It will apply to supplies of construction services on their own, or when services and materials are both supplied. It does not apply to supply of materials on their own. The scheme isn't optional. If you supply services in the construction industry and are VAT registered, you must use it. This measure is being introduced because of VAT transfer fraud in the construction sector. Transfer fraud is where a VAT registered subcontractor has issued a VAT invoice. He's been paid for that VAT invoice by his contractor, including receiving the VAT amount. He doesn't pay the VAT element over to HMRC, but the contractor still claims his VAT back from HMRC, so the revenue are completely out of pocket on that VAT. This is estimated to cost the revenue 100 million per year. The revenue estimated will affect 150,000 businesses. When it was first introduced, they were going to call it the Domestic Reverse Charge for Building and Construction, so some guidance will be under that name. There's a similar scheme introduced called the EU Reverse Charge to deal with sales between EU countries, and this scheme has been very successful. Charlotte's going to go through now what is changing.
Thanks, Helen. So the new CIS reverse charge applies when there is a supply for VAT of construction services and materials. The supply is made at the standard or reduced rate of VAT. The supply is made between a UK VAT registered supplier and a UK VAT registered customer. Both supplier and customer are registered for CIS. The customer intends to make an ongoing supply of construction services to another party. The supplier and customer are not connected. The new CIS reverse charge does not apply when supplies are zero rated or the customer is based outside of the UK. So the key difference between CIS and the reverse charge is that with CIS, you do not include materials, but with the reverse charge, you do. However, there is a de minimis that if materials comprise 95% or more of the invoice, the reverse charge need not apply. So what work falls under the CIS regime? You'll see on the slide there's quite a list. So supplies that are affected: work on demolishing or dismantling buildings or structures, work on constructing, altering, repairing, extending, demolishing of any works that form part of the land, installing heating, lighting, air conditioning, ventilation, power supply, etc. Internal cleaning of buildings and structures carried out in the course of construction work, painting or decorating the inside or the external surfaces of any building or structure, and services which form an integral part of or are part of the preparation or completion of the services described above. And so what work doesn't fall under the CIS regime? So for all of you extractors and oil of natural gas drilling for and extracting minerals, you don't need to apply it. Manufacturing, building or engineering components or equipment, materials, plant or machinery, or delivering any of those to the site. Manufacturing components for heating, lighting, air conditioning, ventilation, power supply, etc. A key one is the professional work of architects or surveyors, or of building, engineering, interior or exterior decoration, and landscape consultants. Making, installing, and repairing artworks such as sculptures, installing seating, blinds, and shutters, installing security systems, including burglar alarms. So when we're thinking about zero rated, that would be the construction of new qualifying buildings, and your services will be made in the course of the construction of the building, that being normal development of residential property. So if you have any extra bits like a wine cellar or a swimming pool, then that would not be zero rated. However, even though it would be standard rated, you wouldn't have to apply the reverse charge. Snagging items would still be zero rated, and the zero rating is not straightforward or automatic, so do have a chat to us and seek advice if you're unsure. Helen will now chat to you about who is affected.
Thanks, Sharla. Most of the construction industry is affected, so all subcontractors that are VAT registered that provide any labour will be affected by this change. Contractors using those subcontractors will be affected, as they will need to ensure the subcontractors are billing them correctly. End users of contractors will also be affected, as they will need to ensure they are declaring their status appropriately to contractors. Simon's going to go through how it actually works.
So under the new rules, VAT registered subcontractors who provide a service and any related goods to a VAT registered contractor who is CIS registered no longer need to account for the VAT. Instead, it's the contractor who will account for the VAT as input tax, as if they made the supply to themselves. Let's work our way through an example. This one's straight from the HMRC website. So no political correctness here. We've got two chaps. So if we imagine we've got John the roofer, who is VAT registered, who supplies the materials and roofs to a new office building for the main contractor, Bob. Contractor Bob, who's VAT registered, supplies construction services to a developer. The developer, who is VAT registered, is working for an end user. So under the old system, John the roofer would invoice contractor Bob £120,000, made up of his £100,000 bill for materials, labour and works, and £20,000 of VAT. But under the new system, John invoices Bob £100,000 and states that the CIS reverse charge applies. Contractor Bob pays the £100,000 fee and then includes within his invoice and accounts for output VAT and input VAT, including the £20,000 on the supply of John's services. John does not account for output VAT. John charges and receives £20,000 less than he would do under the old system, but he doesn't have to account to HMRC for any output tax. So how does John actually do that? So when he's paid, he includes in box 6 of his VAT return the value of the sale, but he does not add VAT to box 1 as he hasn't received any output tax. The charge may well impact on John's cash flow, as under the old rules, if contractor Bob was a prompt payer, I know that's rare in the building industry, he could hope that he could use the £20,000 in VAT to purchase his materials. He could then purchase his materials, offset the input tax paid against his output bill. Contractor Bob has a cash flow advantage in that he doesn't have to pay John the £20,000, and then at the end of the quarter, he can't reclaim it, as is accounting for the reverse charge, and the output offsets the input. As contractor Bob is supplying CIS services, he must consider the reverse charge and whether his client, the developer, is involved in the onward supply of CIS services. In this case, it might be difficult to determine, as the developer is working on behalf of the end user, who is an investor, and the reverse charge doesn't apply. In this example, it may be the developer's responsibility to notify down the chain.
Right.
Now, there is one other wrinkle to be aware of, which is that staff and agency workers, you should be aware that employment businesses who supply staff and who are responsible for paying the temporary workers are not subject to the reverse charge. That's just agency staff. So I will pass you over to Charlotte, who's going to work through the importance of end users.
So the CIS reverse charge does not apply to taxable supplies made to the following customers: a non-VAT registered customer, a non-business customer. The end user is the CIS registered person at the end of the supply chain who does not make onward supplies of the building and construction services. Intermediary suppliers who are connected. Intermediary suppliers are end users or intermediaries connected with end users, i.e. landlord and tenant. To be connected or linked to an end user, intermediary suppliers must either share a relevant interest in the same land where the construction works are taking place, or be part of the same corporate group or undertaking as defined in section 1161 of the Companies Act 2006. The following and any persons connected to them have a relevant interest in land: landlords, lessors, licensors, tenants, leasees or licensees. A relevant interest in land does not include any temporary rights to occupy land to carry out building and construction services. So the end user plus intermediary supplier, here's an example. A property owning group may buy construction services through one member of the group and recharge those services to either group companies, their tenants, or both. All the members of the property owning group and their tenants will be end users. The reverse charge should not apply. The end client must confirm its status down the line that it is VAT registered within CIS and in writing that the supply being made to it is not an exempted supply within Article 8 of the VAT Section 55A Order 2019. New customers should be asked to provide details of their registration as a contractor for CIS purposes or a copy of their CIS verification of you and retain these. It is recommended that the end users sign a statement for each applicable contract. As we say, we are sending a guide out straight after, and the suggested wording is in there. But just to read it to you, we are an end user for the purposes of Section 55A, VAT Act 1994. reverse charge for building and construction services. Please issue us with a normal VAT invoice with VAT charged at the appropriate rate. We will not account for the reverse charge. For businesses that often deal with end users, the practical way of dealing with the question of the end user status is for the business to include a statement in their terms and conditions to say they will assume that their customer is an end user unless they say they are not. This places the responsibility on the customer to respond if this is not the case. Helen will now discuss supplies of services.
Thanks, Charlotte. HMRC has defined a list of construction services that fall within the new reverse charge regime, which Charlotte went through earlier. However, to make things even more complicated, certain excluded services can become included. Here are 3 examples when this could happen. The first one, if there has already been a reverse charge service between 2 parties on a construction site, and if both parties agree, any subsequent construction supplies on that site between the same parties can be treated as reverse charge services. The second one, if there is doubt whether a type of work falls within the definition of a specified service, as long as the recipient is VAT registered and the payments are subject to CIS, the reverse charge should apply. So basically, if in doubt, use the reverse charge scheme. Thirdly, where the contractor is asked to consider all construction contracts with a subcontractor. If they can see that reverse charge applies to more than 5% of contracts by volume or value with that subcontractor, then the reverse charge can be applied to all the contracts. An example given by the revenue of this is a joiner constructing a staircase off-site. This done alone would not be covered by CIS. The joiner then installs it on site. So now the whole contract is a reverse charge and CIS service because of the installation element of the supply. However, this is only one of a number of scenarios, which highlights the importance of seeking external advice and support, as well as the need to prepare for these changes. Simon will go through now some points for you to consider.
So some action points to think about and go through now. You need to make changes to your invoice and accounting procedures to take the reverse charge into account. This will differ whether you are a contractor or a subcontractor, and in fact, you may well be both in the same quarter. You should also discuss the cash flow implications on your business of moving to the new regime, as there may be ways to mitigate the impact. The reverse charge will apply on all jobs completed on or after the 1st of March 2021, but it may also apply to work that was commenced before that but completed afterwards. Determining when the switch to the new regime takes place depends on the tax point. Where the tax point is on or after the 1st of March, then the reverse charge should be applied even for work commenced before this date. Otherwise, the old rules apply. Charlotte's going to chat through some of the more issues and look at the tax points in particular.
Thank you, Simon. So if we move to the tax points, ordinarily a tax point is the earliest of payment and completion of service. This is the point at which the VAT must be accounted for. If a VAT invoice is issued within 15 days of the ordinary tax point or prior to the tax point, the invoice date becomes the new tax point. If we consider completion of service for a single payment contract, that would be when the contract is finished. But for a staged payment contract, it would be at the completion of each stage. If we're thinking about retentions, then for a single payment contract, the tax point is the earliest of payment or the date an invoice is raised for the retention. For a staged payment contract, the tax point of the retention is the completion of the final stage of the contract. This means that if a job is paid for in 2 or more instalments, VAT on retention is due when the job is completed, even if the retention isn't then paid until months or years later. If we think about the treatment of the existing contracts and that cut-off date of the 1st of March, then the VAT treatment of a particular invoice or payment is determined by the tax point and whether this occurs on or after the 1st of March 2021. For contracts starting after the 1st of March 2021, you should decide whether the reverse charge applies from the start of the contract. If we think about VAT schemes, 2 key points. Cash accounting cannot be used with the CIS reverse charge invoices. This will have an impact on your cash flow for better or worse. And so this is a significant issue if you're currently on cash accounting. Do have a chat to us if this applies to you. With the flat rate scheme, you just need to have a little review. The flat rate does not apply to supplies made under the reverse charge scheme. If you're not VAT registered, you might decide to do that now because it makes applying the rules a lot easier. This is because where the services are caught by the new rules, the recipient business is treated as making a supply to itself of the services received for VAT registration purposes. This is regardless of whether the supplier is VAT registered or not. The supplier is still treated as making a taxable supply for VAT registration purposes too. These rules could result in a non-VAT registered business having a far lower effective VAT registration threshold. If we think about VAT payments, where both the supplier and the recipient are VAT registered, or should be VAT registered, the recipient is liable to account for and pay the VAT to HMRC on behalf of the supplier. The supplier will not make a VAT payment on those supplies, and the first £1,000 per supplier per month is not ignored in this case. When we think about the invoicing, when supplying a service subject to the reverse charge, suppliers must show all the information that is normally required on a VAT invoice, plus a note on the invoice must make it clear that the CIS reverse charge applies and that the customer is required to account for the VAT. No VAT is charged on the invoice, and it should state how much VAT is due under the reverse charge or the rate of VAT if the VAT amount cannot be shown. But that VAT should not be included in the amount charged to the customer. Helen, we're talking later about the different cloud-based softwares, but if you use software to produce your invoices and your system cannot show the amount of VAT to be accounted for under the reverse charge, then the wording should state that VAT is to be accounted for by your customer at the standard or reduced rate of VAT, based on the VAT exclusive selling price for the reverse charge goods or services. If an invoice is for multiple services, the customer must be able to identify the reverse charge goods or services. Under the VAT Regulations 95, invoices for services subject to the reverse charge where the customer is liable for VAT must include the reference reverse charge. Again, in the guide, there are some examples of wording. It's basically VAT Act Section 55 applies, or the customer to pay the VAT to HMRC. Where customers issue authenticated tax receipts or self-billing invoices, HMRC's recommended wording is reverse charge, we will account for and pay for the output tax due to HMRC, and reverse charge, as a UK customer, we will pay the VAT due to HMRC. As with anything new that HMRC bring in, they always have a soft landing phase. So don't worry if you make a mistake and it genuinely is a mistake and not deliberate, then that's fine. There won't be any penalties and you just need to correct it on the next return. Remember, unless the error is more than £10,000, then you can just correct it on the next return and you don't need to make a separate disclosure. So if we're talking about errors, just going through some of the general VAT errors, it can be record keeping, lack of knowledge around VAT, so Common errors are where people are claiming VAT on insurance, but it's actually insurance premium tax, which isn't reclaimable. Entertaining, if you're entertaining customers, you can't claim the VAT back. So it tends to be just common errors. These are the sorts of things that tend to get picked up if you have your software health checks with us. Sometimes tax data might be out of date, or there might be technical errors. Typical CIS errors tend to be failure to determine that a construction contract is within CIS, incorrectly excluding activities from CIS, and subcontractors overstating material elements or including the cost of their own plant or their own scaffolding as the deduction. VAT registered subcontractors including VAT as part of their material costs, and failure to apply CIS to certain recharges between entities within the organisation. So Making Tax Digital has been in for a little while now, and it has been quite challenging. It certainly was when it was first introduced. Some of the errors tend to occur with MTD. Again, the wrong VAT codes. Initially, they let you have sort of late claims, so there could be some initial errors. Software doesn't automatically flag up the wrong rate of VAT, so you do have to have a bit of a knowledge as the user. And also, it is advised that VAT turnover reconciliation is done each year when the accounts are prepared, and that is done as part of the accounting process by us. Of course, some adjustments aren't VAT errors, like bad debt relief claims, credit notes, pre-registration or post-registration VAT claims, the capital goods scheme adjustment, and then if Helen will now have a chat to you about the different types of bookkeeping software.
Thanks, Ella. So as a result of Making Tax Digital, most VAT registered businesses are now using some form of bookkeeping software, either on the cloud or as desktop. We'll have a run through of the most popular ones and how they are ready for the reverse charge. So Xero are ahead of the game. So you can go to the accounting menu, advanced, then tax rates, and there'll be a blue button there to apply the domestic reverse charge. They've got it running on their demo data, so you can go on there and have a little play with it. QuickBooks are bringing it in on the 1st of March. So that'll be to go to taxes and then tax rates and follow the instructions to apply the domestic reverse charge. Sage Desktop and Sage Online, they've put in new T codes. So T21 for standard rated reverse charge and T26 for the reduced rate. And they're saying that for the desktop version, you have to be on version 26 or later. Cashflow and Free Agent have not released any instructions yet, so their developers must still have this in progress. Some of the software packages help with you calculating your CIS automatically. Xero offers it at £5 a month, and it can verify subcontractors and it will file your return from within Xero. Sage Desktop does the same, so verifies and files a return, but they charge £10 a month. QuickBooks, Free Agent, Cashflow, and Sage Online only does the calculation, so you would still need to use your HMRC portal for filing and verifying your subcontractors. Please note that invoice templates in the software will only be updated for CIS and reverse charge if you are using standard templates. If you have your own templates set up, you will need to go in and update these yourself. You can always look on the demo data to see how the standard templates work. So next steps. We've listed out some questions to ask yourself to see if you will be affected and your next steps. Should you be VAT registered? If you're not. Are all sales of building and construction services within the CIS definition? Or some works not currently within the CIS definition now fall into reverse charge? Are the supplies at standard or reduced rate? Have zero rated supplies been identified? Is the customer an end user? Can existing accounting and invoicing systems cope with these changes? Which staff need to understand these measures? Do you need to get training in place for the staff? Is cash flow likely to be affected? And would a switch to monthly VAT returns help you? Simon's going to discuss how we can help.
Thank you very much, Charlotte. Thank you, Helen. So we're coming to the end of our formal webinar now. But, most of all, don't forget, you're not alone. We're here to help you. We look after lots of clients within the construction industry, from main contractors to subcontractors to plumbers, electricians, joinery firms, all sorts of people. So we're well versed in how we deal with and look after the construction industry. We've listed there some of the aspects that we can help with as well. So please, if you need any help, don't hesitate to ask. In a moment, we will have a Q&A session, and we're happy to continue with that as long as is needed. Don't forget, we will send you the guide and also a link to download the recording. But any questions, really, I think. Thank you all. Oh, and welcome to Ben, who's come to help with the questions. If you can think of a particularly esoteric or detailed point, Ben's been boning up on all of the rules. And our first webinar, we had a couple which made him scratch his head, and also, so yes, I looked at that one earlier.
So one of the ones that came up in the first session was someone asked if they could invoice services and materials separately, and then reverse charge services and apply VAT to materials. And the answer is no. The reverse charge applies to a whole contract. So however you invoice that contract, you would apply the reverse charge based on the contract. We've got one in the Q&A. We currently filing using the cash accounting scheme. Does this mean we can't be on the scheme anymore? So technically, you could continue using the cash accounting scheme for anything that is not reverse charge, and then use the accrual scheme for things that are on the reverse charge. But this could get quite complicated, and I'm not sure how software would deal with it, especially when we're looking at your expenses and the expenses that relate to the reverse charge services versus the expenses that relate to the non-reverse charge services. Yeah. So in theory, but it would be difficult.
Yeah, Gemma, Xero believe that they've got this one nailed though. So have a go on the demo data, because I know you've just gone on to Xero. So
I'll have that.
Have a play with that.
Yeah.
Oh, another question's popped up.
No, it's just a thank you. Just a thank you.
Thank you. Okay.
When we were looking at this, there were also other things that you can't use on the cash accounting scheme. So if someone pays a deposit, you should accrue your accrual account for that. And when you buy stuff from abroad, that should also be done on an accruals basis, not on a cash basis.
If anyone would raise their hand to ask a question, we can unmute you. Yeah.
Timothy Handley's done that.
Yeah, you're unmuted, Tim.
I can't hear him.
We can hear you, Tim. Fire away. Oh, technical issues there for Tim.
How's that?
That's good. Good.
Brilliant.
Fire away, Tim.
Yeah. Basically, we're concerned. Obviously, we're basically a subcontractor, but we work direct with what I believe the end user is, i.e., the developer, i.e., Persimmon Homes, etc. Is that correct?
So it would be up to them to confirm whether they're an end user or not, and it may vary from site to site. It depends on what on how they're obviously selling their properties, and it depends whether they're selling them to another part of their group, or they're leasing them they're then leasing them out, or so you would need to confirm with them on a contract by contract basis.
Tim, you sent me a letter, didn't you? You copied me a letter.
Yeah.
That was confirming that whoever supplied that letter was the end user. It had the right paragraph in and everything.
Yeah.
Right. So that's Swindon Borough Council, basically, wasn't it?
Yeah. So they're confirming they're the end user to you.
Yeah.
they're up to speed, but so far Persimmon not.
So basically, if I'm invoicing something to Swindon Borough Council, I don't charge them VAT, but they pay the VAT on.
No, you would, if they're the end user, if it's a VATable supply, you would charge them VAT.
Right. Right. Okay.
Okay. You okay with that?
Well, sort of. It's a minefield as far as I'm concerned at the moment.
So end users, you charge VAT. If they're not an end user, then you use the reverse charge scheme.
Right. Okay.
It's all about whether the person next down the chain, Tim, is going to be charging VAT or, is going to be charging VAT or not. That's the sort of thing. So Swindon Borough Council, that's it. They are the end. There's nobody further. Whereas if you were invoicing a main contractor, they might be then charging it onto their client afterwards.